guys, it's Taylor. I just wanted to jump on here and record a video about my real estate investing journey. For those of you who tuned into the Real Wealth Builders webinar hosted by Willie Mandrell last week, I think it was, so that was the last week in April. If you tuned into that, you might have heard a little bit about my real estate journey. I figured I would go ahead and do a little bit more of a deep dive and tell you a little bit more about our journey and where we are so far and where we see ourselves going. All right, so to start all the way back at the beginning, I never really thought that I would necessarily go into real estate investing as a career path. It wasn't really something that crossed my mind. Growing up, my dad had done some flips, and my parents were super into renovation, so we renovated lots of houses. So that was something I was very familiar with, I was really comfortable with, but wasn't necessarily something that I saw as a career path that I could take forward. I was always really interested in architecture and real estate, particularly residential. So after transferring to Northeastern University, I did start studying architecture there. I did have to take some time off from college, so I ended up switching my major to business and my minor to art and design, so I could still get a little bit of that creative piece in there. So my senior year of college, I believe, I decided to get my real estate license. Just to have it. I wasn't really sure if I was going to use it, but I thought it would be a good thing to have. Both of my parents had theirs. I remember growing up driving to Florida. My dad doesn't fly, so every year we would drive to Florida, and I have this vivid memory of one year in particular, or maybe it was 2 years, where I was sitting in the back seat. I was probably in like high school, early years of high school, middle school, and I was reading them test questions for the real estate exam, so before they had taken their real estate exams. So I was already pretty familiar with the real estate world, but didn't know it, didn't realize it at the time. So I ended up getting my real estate license, and after I did that, I started interviewing at a few real estate companies when I was trying to figure out what I was going to do after I graduated. I eventually decided that I wasn't going to pursue that. I got an opportunity for a leadership role in the financial industry, and I thought that that would be a better opportunity for me to take right out the gate. So I did that for a few years, and turns out it wasn't for me, so I transitioned into higher education, which was amazing, and I loved it so much. I still love higher ed. If I could have two career paths at once, I would totally go back. So my husband Jeff and I, we got married back in 2016, and we had been living in an apartment in Somerville, Mass for maybe just around 4-ish years, and we decided that it was time for us to buy our first place together, which was really exciting. I had this vision of this single family house that I really wanted, that was all ours, and we had, we could do whatever we wanted to it and do renovation and everything. And Jeff came up with the idea that we should buy a multifamily so that we could live in one floor, rent out the other floors, and get that to pay down, get the rent to pay down our mortgage. And in total honesty, I was like, no, I want a single family, I want something very specific, and I'm sure a lot of people can relate to that. You might even be thinking that right now. But his reasoning made a lot of sense to me. So we were both working in Boston, and so we knew we needed to be close to the city. We needed to be within T access. We didn't want it to take a ton of time to commute in. We don't want to spend a ton of time commuting. And so the most affordable and effective way for us to do that was to buy a multifamily so that we were actually paying less in mortgage. So this term where you buy a multifamily, so usually it's under a 4-unit, live in 1 unit, rent out the rest. You typically renovate it so that you can get better rent or sell it for more or whatever you're going to do. It's called a house hack, but we didn't know that at the time. We just were like, all right, well, we're paying, I think at the time in Somerville, we were paying like $2,200 a month for a 1+ bedroom apartment in a really amazing area. And if we could pay less, that'd be great. So we started our journey, we started looking, we really wanted a 3-family, but at the time when we started looking, this was 2018, or I guess 2017, tail end of 2017, we started looking, and there really weren't a ton of 3-families on the market. They're just hard to find in the price range that we were looking at, and that weren't like total teardowns. So we ended up being like, all right, that's fine, like we can go look at duplexes, we won't make as much off of them, we probably won't break even, we'll still be paying towards the mortgage, but it'll be way cheaper than what we would normally be paying. So we ended up finding our 2-family that we currently live in now, and we purchased it for $625,000 back in 2018. So we closed on it in March 2018. So it's almost exactly a year since we closed. We're now in May, so I guess we're a couple months past. So what we originally did was we came in here, we renovated the 2nd unit, which was way, way worse than the unit that we were living in. Now that unit is definitely the nicer unit, and our unit needs a lot of work. And so we were renting the upstairs unit, which is a 3-bed, to a long-term tenant, and they were paying towards our mortgage. And after that, we were kind of hooked, because now we were paying essentially, I think it was something like $1,600 a month, which was $800 less than what we would have been paying otherwise, which was huge. That was amazing. That allowed us to save so much money. So we were like, all right, let's keep doing this. So we had intended to continue to purchase property in kind of the Boston area. But if you're familiar with this area, it's quite expensive. So it was going to take us a really long time to be able to save up if we were going to be buying it ourselves. Right around this time, one of Jeff's coworkers was like, hey, have you guys ever heard of Bigger Pockets? And we were like, no. And so we started to do some research into it, but kind of like let it go by the wayside. We probably should have done more research up front once someone told us about that. But anyway, so we were trying to figure out a timeline. We were like, okay, 10 years from now we can buy the next property. Which is now, knowing what I know now, that's a really long time frame. You shouldn't be waiting 10 years in between buying property if your plan is to get a second stream of income, which started to become our plan. And we read an article about a woman who, she owned I think it was like a 4-family or something like that somewhere down south. Her husband and her were living in it, and they were like doing really well. And I was like, well, that's amazing and great if you live in a place that's really cheap. And then it kind of just hit us. It was a little bit of an aha moment where it was like, well, I guess why can't we do that? Like, what's stopping us from buying something in a cheaper place? So that's what started our idea that we would start looking out of state. So we wanted to look at places that we didn't have to deal with snow removal, because we have to deal with a lot of snow removal up in this area, and somewhere where the prices were low, but the rent in comparison was really high. So after some analysis of different cities, we settled on Memphis, Tennessee. And I could talk for hours about analysis and how to pick the right city for you and your strategy, but we'll do that another day. So anywho, so we start researching. property managers down in Memphis, because realistically we need somebody to be managing the properties that we're going to have down there. And we decided that we wanted to do long-term buy and hold properties, so your traditional like landlord-tenant relationship. So I think that we called some of the larger property management companies in the area to find out, who was the most successful, who was the easiest to talk to over the phone, who was really nice, who had good processes, all that good stuff. And we settled on the property manager that we have now. So we flew down there once. This is the one and only time that we have been down to Tennessee. And we met the property manager, we really liked him, we looked at a ton of properties, we ended up putting out a bunch of offers on places down there, but none of them panned out. And then a little bit later, we did find a single family and we decided to move forward with that. And so we closed on that property back in, I believe it was January 2019. So a little less than a year after we purchased our duplex, our house hack. So that property, we purchased it for $65,000 and it rents for about $890 a month. So the comparison for like price to what you're actually making, it's pretty darn good. So we decided that we wanted to scale up. We wanted to look at larger properties. So almost a year later, so September 2019, we closed on a 5-unit property. And so once you get above 4 units, it's considered a commercial property. So the valuation is a little bit different. And so that one is definitely a BRRRR, which is buy, renovate, rent, refinance, repeat. And we are in the renovation rent portion right now. It needed a new roof, a new parking lot. Some of the tenants have been there for like 20 or 30 years. So like when they move out, we're definitely going to need to renovate those, change the rent. But we think we're going to be able to double the value of the property in a year. So that's pretty huge, because once we do that, we can refinance and do a cash out refi and take out some of the money that we have in the property and use that to invest it in other properties. So it has been amazing to have these out-of-state properties and really given us this vision for what we want our future to look like. So backtracking a little bit, back in April 2019, I decided to start using my real estate license. And this was actually another thing that Jeff had to convince me of. I wasn't sure that I was ready to move out of the role or the trajectory I was on in my current career, because I felt like I was in a really good place and I was starting to climb the ladder. But I decided to move forward with it because I knew that this was something that we could potentially scale up quickly and could be a business that we could create ourselves. So I am a serial entrepreneur. My whole life I have created companies. Some have been good, some have not been good. Jeff and I have created a couple companies. We've learned a lot from those. And this was really, really viable because we were already making money from it, and which was insane. It was the first money. It was the first real, true, money-making venture we had really found that worked for us, that we loved, that we were super passionate about. So after doing real estate part-time for a few months, I actually took our real estate business in general full-time July 2019. So it's been almost a year that I've been doing this full-time now. Obviously we're in kind of a weird place right now because of the pandemic and I'm pregnant, and so I've had to reevaluate my strategy a little bit, and what do I want the business to look like, and how can I maintain the business, and what can I do virtually, and what am I comfortable doing in person. And that's still up in the air, but I know that the investing portion is strong and we know our strategy there. So we've moved now into more of a syndication model or a partnership model, where we're moving into larger properties and we're working with partners and limited partners to help and fund these larger deals. So right now, 20 to 30 unit deals is what we're looking at. With this current situation, we are evaluating different asset classes. So asset classes are things like, so right now we're looking at residential multifamily properties is one type of asset class. Like a shopping mall, shopping strip, that's a different type of asset class. Office park, etc. So, single family, all those things are different, and they are different strategies, and some work for some people, some don't work for others. So we very much focus on long term. The one exception to that is that we turned our upstairs unit into an Airbnb as a short-term rental. It was like that for about maybe eight-ish months, and it was going really, really well until everything happened with this. And we knew we were going to transition it back to a long-term rental eventually, but this gave us the extra push to do it sooner. So now we're doing some renovation up there so that we can turn that back into a long-term rental. So current status of all the properties, the single family rented up, and moving forward we've had to replace a couple things this last month because we had a turnover. The 5-unit, we're now all rented up. We do have some projects we need to complete spring, summertime, and hopefully can refi that this coming September, right around the time the baby's born. And then with our duplex, we actually are in the process of a refinance. We have our appraisal on Monday, fingers crossed, and we think that we should be able to get to a good place to bring me now to our what are we looking to do in the future strategy. So now future scale, or future. So with our 2-family, we had planned on condoizing and selling probably in the next 2 or 3 years once we had been able to do all the renovations that we needed to do to condoize. And then we would take that money and we would put it towards future investments, purchasing some land for where we would build eventually. However, given the current situation and dropping interest rates, we've decided to jump on that and see if we can take advantage of a refinance. So the refinance may allow us to be in a position to rent out both of these units and actually cash flow, which is something that we didn't anticipate being able to do. And if we're able to do that, we can go buy another house hack in the next year. And the plan would be to get a 3-family this time, 3 or 4, so that we could essentially live for free. That would be the goal, so that we can save more money to buy more investment properties. Because eventually we want Jeff to be able to take this full-time with me, so that would mean we need to have financial independence and structure and security through our investment properties. So that's where we are right now. We are hoping in the next couple years to acquire many more properties, and we're in the process. There's just a lot that goes into all of the different strategies and methodologies that you do, but the way that Jeff and I think about it is our main goal is to spend time together, and we're already doing that, which is fantastic because we're both super passionate about this work, and we know that the life that it can create for us is something that can be expedited. I really like the idea of being our own bosses, working with each other, and this will allow us to do that full-time, spend more time with our future family, and also follow any passions that we have. We love wine, we love community building, so those are 2 things that we're really exploring for our future. We'd love to do something with wine in the future. We do have some goals around that, but I'll keep that on the DL until we're a little bit closer. But yeah, so wanted to kind of walk you through that strategy, where we are, current state, and where we want to go. And I wanted to share this story because sometimes I feel like people think that you have to have a ton of money, or you have to have a ton of experience, or be really smart, or all of those things. But you don't. You just have to have the interest. And if you have the interest, you can find the money, you can do the research, you can figure it out, you can network. It's really for anybody, regardless of your situation. I And so I'd love to hear what people are interested in. Our strategy is definitely long-term, not flipping or anything like that, but I definitely would love to hear what people think. Thanks so much for watching, guys. Really appreciate it. I hope that you took some helpful tidbits from this. If you have any questions, leave them in the comment boxes below. You can always send me a message on Instagram too, and I'd be happy to connect. Thanks, guys.